Hey, 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 how's everybody doing? It's your boy, Chicago Sean. Not anymore. Option Sean. I gotta stop saying that. I used to be Chicago Sean on Twitter for years, for a decade plus. Now I am Options Sean on Twitter. Had to change the name because I haven't lived in Chicago for 12 years. So that kind of makes sense, right? Also, coincidentally, heading to Chicago next week, which means we have a programming alert. We'll discuss that at the end of the show here. But hey, this is the Options Jam session for Thursday, September 12th, 2024. Hope you guys are doing well. If this is your first time here, you're enjoying my screen freeze, which is awesome. Hopefully we'll get through that quickly. There we go. We're done. What we do here is we review action in the All-Star Options portfolio, any adjustments to trades that we have on the books, anything that we've exited, either for a loss or for a profit, any adjustments that may have been made. We review updating stops for existing positions, try to either lock in gains or minimize potential losses. And then we do a quick little rundown of any new trades that have been added since we last spoke. But before we get too deep into the show, we have to drop the old disclaimer here that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you are learning something from following my process. So let's start at the high level. I got the QQQ chart up. But the SPY chart is similar. These are the broadest market indicators I follow. Yesterday, that was quite a candle we had in the market yesterday. We were trading down early. It looked like we were about to maybe make some new lows for this little cycle that we've had over the last few weeks since the middle of August. But boy, did we have a reversal intraday, closing at the highs. The S&P chart looks similar. Let's bring that up. Not much different, but to me, that feels like the market has made a decision or is close to making a decision that the next move is higher. Now, that doesn't mean I'm going to load the boat long here, go triple leverage long and shoot for the fences. That's not what I'm thinking, but it does kind of guide me towards future trades that I want to put on. I'm probably looking for more bullish bets here. Maybe I could start getting a little bit more aggressive in some tech names and some semiconductor names, things like that. The types of stocks that will give us alpha if the next move is higher and if we are going to break above the summer's highs and make new all-time highs in the S&P. So that's where I'm thinking. Let's bring up VIX real quick just to see where we're at volatility wise. That's VIX M. We don't want that. We want VIX. There we go. We had a little bit of a spike beginning of the beginning of autumn trading, right? Once all the traders came back from summer vacation, and this was the first trading day following Labor Day. We had a big spike in vol. We seem to be giving it back a little bit. We have a 17 handle on the VIX right now. My gut feel is that VIX is probably going to trade back down to the 15, 16 level. At least in the short term, we'll see where it goes from there. But basically what I'm saying is there doesn't seem to be a whole lot of fear in the market, or whatever fear there was is receding a little bit. All right, so let's get into positions that we've exited since we last spoke. We have 4 exits this week. It's good news, bad news. We didn't really suffer any big losses in any of these, but we had to prune some positions. We always have to trim the weeds, so to speak, or pull out the weeds so that the flowers can grow. So in no particular order, let's start at the top of my list here, Caterpillar. Now, here's a trade. We actually made money on this trade, but you wouldn't think we would have, because here's where we got in July 10th. We look like a well-timed entry, by the way. I mean, look at this. The day we got in, it just shot higher for 4 or 5 days. We were looking like geniuses. I was certainly feeling like a genius, right? But of course, the market humbles those of us who get full of ourselves. And as you can see, we had quite a big whipsaw. Almost got stopped out here on August 5th. Well, thankfully, it closed above our level. But boy, it was looking like we were going to get stopped out. But anyway, a whole lot of up and down in Caterpillar. And it basically, our updated stop was 335. So where we exited the position, the stock wasn't really much higher from where we had gotten in. But guess what? This was a protected risk reversal. So a typical risk reversal is a trade where we sell a put, a naked put, and use those proceeds to purchase an out of the money call. And we usually do it for a small net credit, right? Well, in this case, it was a protected risk reversal because I didn't just sell a naked put. I did a put spread. So I sold the January 310 puts, but then I bought protection. I bought the 280 puts, just, so I didn't have unlimited risk on the downside. But I did that whole trade for a 50-cent net credit on day one. Well, guess what? When I got out here on the 9th, I closed the whole position down and I got a 75-cent credit on the way out. So I collected 50 cents on the way in, collected 75 cents on the way out. All in, I made $1.25. Now, that's certainly not the profit I was looking for. That's not why I was in the trade. That's not the kind of profit I wanted to make, given the risk I was taking. But that's the beauty of risk reversals. These types of trades, sometimes if the market just kind of goes sideways and it doesn't work out for you, you can still make a little bit of money. That's one of the many features I like about risk reversals. But we are now out of Caterpillar. Got out for 75 cents this week. Small win. Again, not the win we're looking for, but we'll take it. Okay, next up, Sarepta Therapeutics, SRPT. We bought a call calendar spread here in late March, a October, March. Did I say March? I said late August. We bought we shorted the October 160 calls and purchased the March 160 calls. All in, it cost us a $9.50 debit right here. Well, it looks like, we were kind of playing. This thing had a gap higher. It filled the gap. And then it looked like maybe it was going to find some support. And right here, it looked like, okay, it's going to make another run at the highs. Well, looks like we bought the high of that bounce. That was a dead cat bounce, apparently. And it did nothing but go down on us. So we got out on Friday last week, I believe, or maybe it was Monday. And we got out for 625. So not a terrible loss, right? We paid $9.50 to get in, got out for 625. A big reason why we didn't lose a whole lot is because of the short calls that we were short, helped cushion the blow. We had profits in those short calls, so that cushioned the blow. But we are out of Sarepta Therapeutics. Okay, next up, Upstart. This was a bull call spread we got into right around mid-August. We bought a January 40-70 bull call spread. That means we were long the 40 calls and short the 70 calls. We paid $5.35 to get in, and boy, it was looking like we nailed another one here. It looked like it was going to make a run up towards at least the yearly highs above 50 bucks. But boy, it came all the way back and then some. Our stop at the time was 35. So when we closed below 35 on September 6th, that was my trigger to exit the trade the next day on the 9th, which was Monday. We got out for 377. But hey, we paid $5.35, got out for 377. Not a terrible loss. I'll remind you, I say this a lot, but when I put debit spreads on, like a bull call spread or just if I buy calls, I always size my position knowing that there's a possibility that I could lose 100% of my premium on that trade. So this $5.35 that I paid, if Upstart, gap down to 20 bucks or worse, there's a good chance I've lost everything in that trade. But at least I've sized my position in a way that if I do lose 100%, it's just like any other loss. Okay. That's the key. That's probably the most important thing I do, right? I generally don't want to risk more than 1% of my portfolio on any one trade. Sometimes I'll risk as much as 2, depending on the situation, but certainly no more than 2, because there's a very real chance I could lose everything in that trade. And I could come back from a 2% portfolio loss, and you can too. But once you start getting bigger losses than that, the math gets hard. So we got out for 377, much better than a 0. So we'll take it. All right, next up, AZN. Boy, this one breaks my heart. This one was looking so good for us. Back in May 16th, we got into the January 85 calls for a 285 debit. It mucked around for a couple of months, but boy, in mid or early August, it decided to break out, and this thing was looking great. We were sitting on some nice profits, but we had to keep trailing up our stop a little bit just to lock in those profits. And we want to, we don't want to be holding the trade anymore if the chart tells us that the trend is over. And in this case, the chart is clearly telling us that this little run up we had in August was exhausted. It came all the way back into this range. 82 was our updated stop level. When we closed below it on September 9th, we had to exit the trade the next day, September 10th. A small silver lining here is that while it sucks that we gave back a lot of open gains, we ended up scratching the trade. And that wasn't on purpose. It's just the way it worked out. We paid 285 to get in. Well, when I got out this week, I got out for 285. I wasn't trying to get out at 285. That just happened to be the fair market price of those options when I placed the trade, and I got filled at 288 or 285, excuse me. And it's a net scratch. So could have been worse, right? We could have lost money on the trade. And we certainly had some nice open profits at one point, and it looked like we were really going to make a go at it, but the market had other ideas. So we are out of AstraZeneca. All right, let's talk about some good news. Let's talk about updated stops on positions, most of which are working. In no particular order, we'll start with eBay. We are long October 55.65 call spread that we paid $254 back in June. It's finally really starting to work for us. It's looking good. Our new stop is at 56. So as long as eBay stays above 56 for now, I'm going to keep holding this trade until we get up to 65. 65 is our short strike on those calls. If and when we get to 65, I'm going to pull the trigger and close the trade at that point, because our upside is capped above 65. So whatever I could exit the spread for when we get to 65, that's when I will get out and book the gain. Hopefully we get there. But either way, we're sitting in gains now, and I'm feeling pretty good about this trade, but our stop is at 56 for now. We don't want to see eBay come back below 56. Next up, CM, Canadian Imperial Bank of Commerce, or CIBC for those who are in the know. We're long the December 55 calls. We bought them right here, August 12th, I believe. This trade has done nothing but work for us. Fingers crossed. Don't want to jinx it, but it's looking good so far. We are raising our stop now to 53. Don't want to see CM come back below 53, which is pretty far right now. Feels like a far away stop, but hey, this stock has earned the right to have a little pullback, right? It's going well. We're almost $6 in the money right now in these calls. We're sitting on some really nice gains. So it's earned the right to fluctuate, so to speak, right? So 53 is our stop now. That corresponds roughly with the rising 50-day moving average. That's our 50-period moving average. That's kind of a good rule of thumb for me if there's no obvious level of support to lean against. So for now, 53 is the new stop in CM. All right, next up, race. This was off to the races from the day we got in. We had a good 2 weeks from the day we got into our bull call spread. We're long the February 550 bull call spread that we paid $12.75 for. It has pulled back on us, unfortunately, still above the level we got in, but don't really love this pullback. So we are moving up our stop to 445, which corresponds with both the high back in March. So former resistance often becomes new support. So I would like to see 445 hold. We also have the 50-day moving average coming up to that level as well. So two good reasons to place our updated stop at 445. As long as we stay above 445, I'll keep holding on to race for now. But below 445, I want out. Okay, next up, IEF, the 7 to 10-year Treasury bond ETF. We're long a calendar spread. We're short the October calls. We're long the March calls at the 100 strike. We paid $1.55 for it. So far, so good. Little pullback today. That's okay. But we are moving our stop to 97. We don't want to, this little level where we pulled back to on August 30th, that feels like a pretty significant level. We don't want to see this trade or this ETF trade back below 97. That's where I will get out of the trade. And lastly, Sherwin-Williams, we're long December 400 calls. Stock is moving our way. It's been a little bit erratic, but we're just off of the all-time highs right now, so that's good. But I'm moving our stop up to 348. It roughly corresponds with this spring's highs. Again, former highs often become support. or former highs, which is where resistance was, often becomes support. So we want to see 348 hold. We have a rising 50-period moving average, almost ready to meet it. But 348, that's our new stop in Sherwin-Williams. Okay. That's it for all the updated stops. Now, we'll briefly touch upon the new trades. I always say when we get into this section of the show that all these trades, we publish detailed trading plans for every one of these trades on allstarcharts.com. So we talk about the setup and why we like it, the strategy we're employing in the options market, how we're managing risk, how we might be sizing positions, where we're stopping out on a chart or maybe a P&L reason, and where we might be taking profits. All those details can be found for each trade that we put on, can be found at allstarcharts.com. If you're not involved, get involved. Send us an email, info@allstarcharts.com, and we'll get you hooked up. So I won't get into the details too deeply on these trades, but I will say that this UNG trade, we are bullish on UNG. We are playing for a bounce here. We got in on Friday last week, playing for a bounce. So far, so good, I think. I mean, we'll see. So it's undecided yet, but it's starting, especially today with today's action. It looks like it's starting to move our way very good. Okay, next up, Square or Block. I still call it Square. Some call it Block. Whatever. The ticker is SQ, and we are short SQ. We have a bearish position on an SQ for no other reason than, well, there's a few reasons, but the biggest reason being, when I put the trade on, I was looking for a little portfolio diversification to kind of hedge the long exposure, the predominantly long exposure I have in my portfolio. So it's good to have some portfolio hedges on, so to speak. And Square, SQ, is one of those stocks that's been a laggard in the industry, right? It's been trailing the S&P. It's been outperforming it. It's underperforming its peers, excuse me. And so if there is a rollover in the broader stock market, our bet, or my bet, is that Square, SQ, will be one of the leaders to the downside, which will be nice. That'll pay us some profits to offset any losses we have in much of our long exposure. So we have a bearish position on in Square. Again, all the details on the blog. Finally, AMRK, A-Mark Precious Metals. We put a bullish trade on in this one yesterday. Had a nice reversal after we got in. You notice the circle's kind of in the bottom part of this candle. The stock rallied a little bit, maybe an hour or two after we got in, and it's following through today. So we're off to a great start in AMRK. Head to the blog to find the details on that trade. So far, so good. But hey, we have an aggressive price target on this one. So if you didn't get into this trade yet and you're interested, there's still time. I mean, you might want to play it a little bit differently given the move we've had since I put the trade on yesterday. But we have an aggressive price target. We think this has a lot of room to run. So check that out. All right, everybody. As I like to share with everybody at the end of the show, these are our updated stops. If you want to take a screenshot, please do. You can pause the video and do that. So there's all of our stops, the 5 stops we have. And lastly, again, if you have any questions or you want to get involved in All-Star Options, please shoot us an email, info@allstarcharts.com. We'll get you hooked up. Also, if you like the charts that I share here, please check out TrendSpider. My friends at TrendSpider hooked all you guys up with a promo code. You see it on the screen there, Sean50. They'll give you 50% off subscription plans at trendspider.com. So if you like them, check it out. Tell them Sean sent you. That's all I got for everybody. Have a great, I promised a programming note. So next week, me and JC and Straza, we're going to be traveling. We're heading to the Future Proof Conference in Huntington Beach. And then we have an event in Chicago for some of our clients. I know a few of you who watch this video will be there. Can't wait to hang out with you again. So we will be in meetings on Wednesday, Thursday, Friday. So there will not be a jam session next week, but I will in the live chat room, which we have a live chat room for everybody, for ASO subscribers. I will put in there all the updated stops. I always put in the exits of any trades that we exited during the week. I put those in, the day that they happened. So they'll be in there. again, I'll list any or all updated stops in the chat room next Thursday. So sorry there won't be a show next week, but as always, you could send me emails, info@allstarcharts.com. That'll get to me, or Sean at allstarcharts.com if you want to go direct and cut out the middleman. Either way, you'll get to me. So it'll be a couple of weeks till we see you again, unless I see you in person at either Future Proof or Chicago next week. Until then, see you all. Have a great weekend. The Bills and Dolphins play tonight. As everybody knows, I'm a Bills fan. JC's a Dolphins fan, so we're gonna have a fun smack talk going back and forth tonight. Enjoy the game for those of you who partake. Have a great weekend. We'll be back next week, or no, we'll be back on the chat in the chat room next week. No videos next week. All right, everybody, take care.